Hello guys, welcome to Formulating Finance. In our channel, we discuss everything related to finance and also the practical aspects about how some of the concepts are applied in real life. In this video, we are going to look at a very simple concept of mutual funds. We all have heard about mutual funds. It is an easy way to invest in market, or it is a way to protect yourselves while being in the market. Let's find out. A mutual fund is like basket of investments. Here it pools the money of several investors and invests this in stocks, bonds, money market instruments, and other type of securities. All the mutual funds are managed by a professional fund manager, and even a very small amount of rupees 500 can be used to invest in mutual funds. Investors can choose a mutual fund scheme based on their financial goals and objectives. Now, one can buy the units of the desired mutual fund in exchange of money. But how to buy a unit in fund? Amount of units depend on the net asset value of the mutual fund. Let's see how the net asset value is calculated. Market value of securities held by the mutual fund divided by number of the outstanding units. So, in this short scenario, that is 5 lakh is the value of the asset, number of outstanding units is 50,000. So, NAV is rupees 10. If you invest rupees 500 in a mutual fund, you will get 50 units allotted to you. How will you value it? NAV is computed every day at the end of the close of market trading hours and is adjusted based on the movement of prices of securities it holds. What about performance of mutual fund? Does it get tracked? Answer is yes, it is also tracked. Mutual fund performance is often tracked by change in its NAV and compounded annual growth rate in its asset values over the period. Is it worth it? And routes of investing. Ideal investment vehicle for regular investors who do not have much time or understand about investing. Routes of investing in a mutual fund. First, lump sum investment. Second, systematic investment plan, that is SIP. Here is an example. You can pay 6,000 as one-time payment, or every month you can pay 500. Objective is to produce capital gain or regular income in a passive way for funds investor. But how will you exactly earn? Through dividends on stocks and interest on bonds held in the fund portfolio. A fund pays out nearly all of the income it receives over the year to fund owners in the fund form of distribution. Funds often give investors a choice, either to reinvest the earnings or take the amount. Second, if the fund sells the securities and have increased in price, the fund has a capital gain. Most funds also pass on these gains to investors in a distribution. Third, if the fund holdings increase in price but are not sold by the fund manager, the fund's NAV increases. You can then redeem your units for higher NAV. For redemption, unit holder has to instruct the mutual fund for redemption, and the mutual fund credits the redemption proceeds in general clearing cycle, say T plus 3 days. Do remember, mutual fund shares do not give its holders any voting rights. Now, we will look at some of the advantages. Diversified investments managed by professionals. Tax advantages factor in new mutual fund schemes. Investment can be done through SIP starting as low as rupees 500 a month as mentioned before. Well regulated by regulatory authorities. Transparency so as to attract public holdings on large scale. Economies of scale achieved due to higher capital base. Thank you for watching. Like, share the video and subscribe to my channel. And please give your feedback in comments. Thank you guys.